Hey, everybody, it's Ken. So here I am with my friend Peter Schiff. He's CEO of Euro Pacific Asset Management, epacfunds.com, and go to check out his stuff. He's got incredible traction on YouTube, on his podcast, on Schiff Radio. He's always in the top downloaded podcasts. He's an economist. And I first met Peter back in early 2000 when he predicted the 2008 crash. And so he wrote the book Crash Proof. He wrote another book. It's behind him there over his shoulder called The Real Crash. Welcome, Peter. We're going to talk about inflation.
Oh, thanks, Ken. Yeah, inflation, that's going to be the new watchword. People really haven't talked too much about inflation really since the 1970s. I remember Gerald Ford had the whip inflation now buttons, where the government was trying to convince people that inflation was our fault, that somehow, too much prosperity caused inflation. It was too many people working or too much economic growth. And so we were supposed to whip inflation as a nation, right? But it's all a bunch of nonsense. Prosperity doesn't cause inflation. More people producing more stuff actually pushes prices down. If you have more stuff is less expensive.
Let's start with
that's supply and demand. But inflation is all about money. That's literally, the word inflate means to expand. That's where it comes from. Prices don't expand. Prices go up, they go down, but they don't expand. What expands is the money supply. And so that's literally what inflation means. It means to expand the money supply, inflate the money supply, inflation. And if you get an old dictionary, even as late as the 1970s, Webster's dictionary, that's how it defines inflation, expansion of the money supply. Well, who's in charge of the money supply? The Federal Reserve. And so the Federal Reserve causes inflation. How does it cause inflation? When it prints money to buy U.S. government bonds, when it monetizes deficits. So inflation comes from the government running deficits, and then the Federal Reserve printing up the money to buy those bonds. So we're having massive inflation right now created by the government working with the Federal Reserve, and prices are going to go way up. And it's got nothing to do with consumers or the public. It's all caused by the government, and it's bad. It's a tax.
Right. I love that. I mean, you have always said inflation is nothing more than a tax. I mean, even Reagan said it's a hidden tax. It's, can we talk a little bit about that? Because I know in the election, they talk a lot about tax and there's a lot of stuff thrown around about that. But this is something that they're getting away with and just stealing people's wealth.
I've even heard Warren Buffett. In fact, I put that video up on my YouTube channel. He described inflation as a tax. He said it's a tax that not 1 in a million understands, which is true. So now, the people on listen to this podcast can be among the few that actually understands the inflation tax. But, I actually have a special report. If you go to the website, europac.com, that's for, on that website. So EUROPAC.com, on the front page of that website, I have a special report of tax by inflation.
Okay, we'll put that up on the YouTube channel too.
Yeah, just download it and just read the report and understand that is what inflation is. Because the government has two ways of getting money from you, paying for its spending. Because we never get government for free. Every dime the government spends has to be paid for by the public. Now, the most obvious way is through direct taxation or any taxation. The government takes my money and then spends it, gives it to somebody else to spend. I can't spend it because the government took it. So now I buy less stuff because somebody else is buying other stuff with my money. But what happens when they just pass a $2 trillion stimulus plan like we just did, and they don't raise anybody's taxes? Are we getting $2 trillion worth of government for free? No. The people who are going to get that money from the government, they're going to spend it. And when they do that, they're going to bid up prices. And because prices go up, I can afford to buy less stuff. Everybody can buy less stuff. And so that increase in price is a tax. And so instead of the government taking your money and leaving you with less money to spend, they reduce the value of your money. So now you can't buy as much stuff with your money because prices are higher. But your standard of living is diminished. Your ability to consume is reduced, whether the government taxes you with an income tax or whether they tax you with inflation. The key difference is you can avoid the inflation tax if you don't own any US dollars or any investments denominated in dollars, because they can't tax your gold. They can't tax, with inflation, they don't tax your real estate. They don't tax your stocks. They tax your money, your paper. Everything else is exempt from the inflation tax, Now, high multiple stocks, if you have high P stocks, that's different. They could actually come down with a lot of inflation. But real assets that are producing cash flow right now, especially where you can raise your if it's real estate, you raise your rent. If it's you're operating a business, you raise your prices. And then, they act as a good hedge against inflation.
Do you think we're heading toward a dollar collapse and maybe, might get debunked as the world's reserve currency? You think that's where
absolutely. I mean, there's no other place that we can end up. I mean, I don't see the U.S. government making any changes preemptively to try to divert the crisis or head it off, right? Because that involves some immediate pain, right? We have to swallow this bitter tasting medicine. Well, nobody wants to do that. Nobody wants to ask the voters to do that, right? Nobody wants to be the messenger of that bad news and get shot at the polls, right? So what they want to do is postpone the crash as long as they possibly can, so they don't have to face the music, right, with the voters. And so the only thing that's going to stop all the spending and all the money printing is a dollar crash. And by the time the dollar crashes, it's too late to do anything to prevent it. It's already happened. So the dollar is going to lose its reserve status, and that's going to shock us into maybe doing something, but it's going to be in a very difficult environment, and it's going to be a whole new world for Americans, because Americans have been able to live way beyond their means. We've been able to consume so much. In fact, just today, we reported the largest merchandise trade deficit in 1 month. It was like $71.1 billion, the biggest in U.S. history, right? So how are we paying for all these imports? We're not. So we're living beyond our means. The world is supporting us. Well, when the dollar crashes, the world's not going to do that anymore. We're not going to be able to run these huge trade deficits. We're going to have to produce the stuff ourselves if we want to consume it, or produce something that we can trade to import real stuff. So we're going to see a collapse in the American standard of living, because the price of everything is going to go way up, because we don't produce that much stuff anymore. We're living way beyond our means, and a dollar crisis is going to put that whole way of life to an end.
Yeah, for those of you who don't know, like the U.S. dollar we've only been the reserve currency for 120 years or something. Before that was the British pound, I believe. And so and most countries are not happy with what we're doing with our dollar, because we're paying them in dollars, right?
Right. And remember that we've only been on this system for about 50 years, 1971, because before that, the dollar was backed by gold.
True.
So
yeah.
The reason that people held dollars was because they held gold. The dollar was as good as gold. So once we defaulted on our commitment to redeem our notes in gold, that's when the world started on this dollar system. And it's only been around for about 50 years, right? Since 1971. This is 2021, or pretty much exactly 50 years. But I don't think it's going to last another 50. It may not even last another 5. We're at the final stages, I think, of this.
Peter, the government is doing a form of what I think is a modern, monetary theory, or MMT. Can you kind of describe what that is? Because I know this is being thrown out right now.
Yeah, well, first of all, I don't like the name modern monetary theory, because first of all, it ain't modern. I guess it has something to do with money, but it's not even a theory, because if something is theoretical, it's well, we're not really sure. It's a theory. Maybe it works. Maybe it doesn't. We know this doesn't work, because it's been tried so many times in the past, and every time it's been tried, it's failed miserably. So there's nothing theoretical about it. We know it's going to end in disaster. And again, the reason I say it's not modern is because they've been doing it ever since they invented paper, right? Some government has tried this nonsense. But basically, what the theory is espousing is that as long as you borrow in your own currency, which is what the United States does, right? That doesn't matter how much debt you have, right? Because we can always print the money and pay for it. So it doesn't matter if the national debt is 30 trillion or 50 trillion or 100 trillion, right? We could just keep on borrowing because we will never default because we could just print money, which in a way is true. We can print money. The problem is that money won't have any value if we print that much of it, in which case it's the same thing as default, right? I mean, if you're a lender and you lend the US government money and they default and you don't get your money back, okay, you lost, right? Well, let's say instead of defaulting, they just print so much money that the money is worthless. So they give you back this worthless money and you can't buy anything with it. Well, is that any different than not having the money at all? Right? I mean, the Zimbabwe government didn't default. Right here, oh, you loaned me $1 billion Zimbabwe dollars. Here you go. Here's your $1 billion Zimbabwe dollars back. That was what? I mean, you can't buy, a pack of chewing gum with that. What difference does it make? So they forget that you can't, if you run these big deficits, you have massive inflation. Now, according to MMT, the way you solve inflation is just raise taxes, right? Oh, we got too much money out there. We need to raise taxes to get some of it back. But all this is a bunch of nonsense. None of that's going to work. But in the short run, the reason it appears to work in America is because we've been running these big deficits for decades now, and it doesn't seem to have created a problem. But that's only because we're the reserve currency. And it's only because we don't understand the problem. Because all these NMT guys, they think there's no inflation because they're looking at the CPI. The CPI is bogus. The government rigged that decades ago. So it isn't a true measure of prices. But they also ignore the asset bubbles that have been inflated in the stock market, in the bond market, in the real estate market, you name it, even in the crypto market. These are all bubbles that are the consequence of all this money printing. And they are doing damage to the economy. And the MMTers ignore all that. And they're just focusing on this rigged CPI. But we're going to have, as I said, a dollar crisis soon, and it's going to completely discredit any of these MMT advocates. I don't know why they have any credibility now, other than they're singing the tune that politicians want to hear. Right? Because what they're basically telling politicians is, hey, whatever we want, we can have as long as we print the money, which is great because politicians want to buy votes, right? They want to give the public something for nothing, but they don't want to tax the public to pay for it. I mean, they're willing to tax the millionaires and the billionaires because there's not that many of them, but they don't want to tax the 99%. They want to get the votes of the 99%. So modern monetary theory allows government to be Santa Claus. We can have all this free stuff and no one has to pay for it because we just print money. Well, that is the most expensive way to pay for government. And pretty soon people are going to find that out the hard way.
Yeah, I know that there's never been a currency in the history of the world that's ever survived. And it's interesting. I was reading an article today from Reuters. Powell said the money supply is no longer relevant because we were talking about, how they stopped reporting M2, on the St. Louis Fed, website. And he basically said, when I studied economics a million years ago, the monetary aggregate seemed to have a relationship to economic growth. No longer. M2 does not really have an important implication. It is something we need to unlearn.
Yeah, look, the whole thing is to say that money isn't relevant to inflation is like saying, air isn't relevant to breathing.
It's the craziest thing.
Inflation is always and everywhere about money. That's what Milton Friedman said. But, when you said there has never been a currency that has survived, that's true. There's never been a fiat currency that has survived.
Fiat currency.
Real money, gold, has survived for thousands of years. Right? There's a difference between money and currency.
Paper money, yes.
Was always money. It was never a currency. Currency is a money substitute, something that you use in place of money that can act like money, but it's not money because money has to be a commodity. It has to be a good, which is one of the reasons Bitcoin will never be money. But there's two types of currency. There's legitimate currency that is backed by money, right? Where the currency is like an IOU for money. And then instead of circulating the money, you circulate the IOU, right? That's legitimate currency. And, the US dollar, Federal Reserve notes were legitimate currency. They were promises to pay real money, gold. That goes back to the old days of the goldsmith. I took my bar of gold to a goldsmith, and then he gave me a piece of paper that said, hey, IOU, 10 ounces of gold. And now I had a piece of paper. And if I wanted to buy something, instead of going to the goldsmith and getting my gold, I can tell somebody, hey, here's a note. I got 10 ounces of gold at the goldsmith. Why don't you take this piece of paper? Now you have the gold, right? It's a bearer instrument. You get it whatever you want, right? That was legitimate. People didn't want the paper. They wanted the gold that the goldsmith had in his vault. But then governments came up with fiat currency, which is paper money backed by nothing. It's just got value because the government says, hey, this is the money. This is legal tender. You got to use it. Oh, and by the way, we're going to collect taxes every year, and you better have this money because this is what you owe in taxes, right? So that's how fiat money works. It has no real value. It just has value by decree. It has value. But ultimately, fiat currency derives its value from the confidence of the people who are using it. Because once people no longer have confidence that it's going to have any value in the future, they don't want it. And then it doesn't matter what the government says. Right? The market value collapses to its intrinsic value, which is zero. And that may be something that happens to the dollar.
Yeah, without a doubt. So, Peter, again, thank you. Can you just talk a little bit about some of your YouTube channels and your podcasts and stuff? Because I know, the stuff you talk about is leading edge. You're always super current. I follow all your stuff. I just saw your interview with Tucker Carlson that you did, I think this week. Or maybe last week, but where can people find you?
Yeah, well, I do the podcast, the Peter Schiff Show podcast, 2 to 3 times a week. You can listen to it at schiffradio.com. That's the official website of the podcast. But of course, you can go to iTunes, Stitcher, any of these places that have podcasts. I also post all my podcasts to my YouTube channel, Schiff Report. I'm getting close to 450,000 subscribers on my YouTube channel. So a lot of people check it out there. But also I'm on social media. I'm on Twitter. You should follow me. Facebook, Instagram is one of the newer platforms that I've been utilizing. But I'm really trying to get the message out. But most important thing to do, yes, educate yourself, educate others, but save yourself financially. Download my report on tax by inflation at europac.com. But I'm helping people manage portfolios. You can buy my mutual funds, the Euro Pacific funds. I've got a gold fund that Robert Kiyosaki invested in. But I've got a value fund, a dividend payers fund, a bond fund, a emerging market fund. You can buy these funds anywhere. But if you don't have a brokerage account, you can set one up with me, or you can buy directly at epacfunds.com, buy any of my funds. We also handle separately managed accounts for larger portfolios. If you don't want to be in mutual funds, we build custom portfolios of international stocks that pay good dividends, that will be not only good hedges against the dollar collapse and inflation, but also allow you to benefit from the huge economic transition that's going to be taking place as Americans become poorer and the rest of the world becomes richer. You want to have your assets where people are becoming richer, so your assets are growing in value and your income streams are rising. So there's going to be a lot of money to be made. Unfortunately, a lot of money is going to be lost during this, decade as it unfolds. But the key is, we can't do anything to stop it. It's going to happen. We want to educate people to understand why it's going to happen, so that maybe we can have a positive impact in the aftermath, how we react to the crisis. We can't prevent it, but we maybe can change the direction after the fact and how we respond to it, and maybe make some positive changes for the better. But also, don't go broke. In fact, if you can get rich at the same time, then you might as well do that, especially if you're considering not only, your own personal comfort, but if you want to make a difference in the future, don't go broke, because the people that have resources will be in much better position to help with, a recovery than the people who are impoverished by the inflation.
Right. Well said, Peter. And guys, just head on over to Peter because he did this in '08. And, when things are going down, other things are going up. And that's kind of the point here. Just go to his stuff, go to epacfunds.com, check him out. And, let's all don't, get caught up in this big inflationary time period that we're headed into and lose all our savings if you guys are heavy in savings. So, Peter, as always, I miss you guys. Haven't seen you for a couple of years, with this pandemic and Belize thing. And I'm sure we'll see you soon and, enjoy your summer.
Yeah. Thanks a lot, Ken. You too.
Yeah. All right, Peter.
Bye-bye.
Take care, buddy. See ya.